Hi everyone. My name is Rajesh Bhatia. I am the CIO of ITI Mutual Fund. It's great to connect with you on this platform. As the lady said, I have 30 years of investment experience. I really come from a money manager's perspective, that to equity fund management. So please bear with me. That's the perspective, that I have ingrained in my brain. So that's really what I'm going to share with you. I was told what kind of advice I can give an MFD. My response was, I don't think I want to give any advice to anyone because we ourselves are students of the game. But I can certainly share my observations over the last 3 decades as to what I think works in investing, which could be of some help to you in terms of what I've learned. I really come from a character ethic perspective. Whenever I think of mastering something or being in a certain business, I really think that you should have the right character first. You have to have integrity, you have to have transparency, you have to put the client first, you have to be diligent, you have to be knowledgeable. You first address those things first. That's really the foundation for success, according to me, and that's really my individual opinion. It is not as if people who don't have the character ethic don't succeed in the sales business. Probably they do. But just that from the value system I come from, I think if you have the character ethic, you are more assured of success. You can be surer of long-term success. You have greater peace of mind that you're doing something which is good and contributing, and there is a purpose to your life. So I really come from that character ethic. So my first advice would be build those foundations correctly so that you can profit from longer term, profit from what comes in front of you. This is a very successful book, 7 Habits of Highly Effective People. We have drawn some analogies from that to kind of talk to you about what we think could be good for you to keep in mind. Those are the 7 points that we really are going to talk about. In a nutshell, if you ask me what is the one thing that drives great investment performance of a portfolio over a long period of time, I think it is asset allocation, right? So we are in India. We're extremely fortunate to be in a country like India. If you take the BSE base of 100 in 1989, and it's 60,000 plus or wherever that is right now, that's a 16% compounded for 42 years. I mean, I can tell you, you can look across the world. There is no country that for 42 years has compounded at 16% per annum. So we are damn lucky to be in India. And by the way, when you look across the world, people will tell you India is really the go-to country for the next 10 years. India's decade, India's century. So we are extremely lucky that we've had such a backdrop, and it's looking even better, as you move forward. But in that context, you have to keep in mind the asset allocation. So the point I was making is, it didn't matter which fund manager you selected as much if you were in India, as long as you were in equities. You would have made tremendous amount of money. Please compound that for 42 years and you'll know what I'm saying. So it mattered whether you were in equities or not. Fortunately, the Indian public, retail public, is getting that message, and the mutual fund industry is doing extremely well. It also mattered whether you were there in equities in 1992. Unfortunately, what tends to happen is people invest the most money at the peak of the markets. So, I'll dumb it down for you. The secret to not making huge mistakes in the market is look for excessive enthusiasm. Whenever there is excessive enthusiasm in an asset class, just ask, should I exit this asset class? That's really so whenever valuations go up and excessive enthusiasm is present in an asset class, the last 5 years is great. It's going up year on year, and everybody wants to get into that asset class. Ask whether I should be there in that asset class. That's the trick to asset allocation in my experience, and that explains a bulk of your returns. The second thing that I've learned in the investing business is that to create wealth, you require time. Nothing really happens in the next 1 year or 2 years. But if you give it time and if you're in the right asset class, that's the secret to building wealth. But how many people, how many of your clients are geared to thinking long term? Temperament is the most important. I've read lots of investors' biographies or comments. They would tell you temperament is the most important thing in investing. So do they have the right temperament? And if not, are you building it for them? So that I think is an extremely important aspect of creating long-term wealth. Emotional intelligence, if that's what you want to call it, but temperament is really the most important thing as far as long-term wealth creation is concerned. Third thing is, again, according to me, the most money is made when you're ahead of the market, right? And you are behaving in a bit of a contrarian manner. So like I pointed out, wherever there is excessive enthusiasm, you have to ask whether I should be out, right? There was a very famous song, 50 million Frenchmen can be wrong. Can't be wrong, but actually you should really interpret it as 50 million Frenchmen can be wrong. Where the excessive crowd is, they all can be wrong, and you have to think a little more independently. So I think contrarian thinking is really, again, a very important ingredient. Thinking for yourself and not following the crowd excessively is, again, a trick to making sure that you keep your wealth and you grow that over a long period of time. In my observation as an asset manager, the one thing that I've realized that wealth managers and MFDs, the most important thing for them to do is really babysit the client. The client is always in emotional turmoil when bad things happen to markets. The primary job of really the wealth manager or the MFD is really to make sure that the client doesn't lose it at the wrong time. The worst mistakes are made when people sell at absolutely the wrong time or buy at the wrong time. There's a guy called Seth Klarman. I think the world of him. He's the best fund manager, probably, according to me, in the world. He's written a book called Margin of Safety, which I think is the best book on investing ever written. And he says, 30 years of compounding can be lost if you make a mistake in the 31st year. So let's say you compounded money at 30% per annum, right? And you then get into the internet stocks of 2021, which is NASDAQ. You can lose 50%, and that can be a permanent loss. If you lose 50%, your compounding comes to 7.5% for 30 years. So you have to make sure that you don't make those kind of mistakes in investing, and of course, your client doesn't make them as well. So I think my sense is that what I've learned is emotional intelligence and babysitting clients is really your primary job, among other things. I think this is one of the best things that has happened to the mutual fund industry, which is SIPs. So the fact that India has had such a great equity asset class and that we have inculcated the culture of savings, which is, I think, a great thing, and savings into equity, which I think is the next best thing, is one of the best things that has happened. I think even if the market is flat, that's what the chart is trying to argue, that if you follow a SIP process, you will still come out ahead. So I think this is one of the best things. Encourage SIPs, as you move forward. I think that's really the way to go. Please don't go by the heading, ignorance is bliss. Ignorance is not bliss, you're in a world where you have to understand. I think this world is changing really, really fast. It's changing in economic terms, it's changing in social terms, it's changing in technology terms, political terms. That's a 2-hour lecture by itself. So you have to be informed. I'm not going to sell jokes to you because I think you need to gear up for what's coming. I think you need to understand that artificial intelligence can do asset allocation. Artificial intelligence can form portfolios. Where are you going to be? You have to make yourself knowledgeable and alert for what's coming, the changes, understanding the environment, what is causing asset prices to go up, down. Those requires knowledge. So please gear up for what's really coming. So ignorance is bliss is misnomer there. What I mean by this is a lot of questions that are directed are usually unknowable. 2 महीने में market क्या लगता है? अभी डालूं कि 2 महीने में डालूं? These are not knowable questions, but these are the most frequently asked questions. You'll be surprised. So focus on the knowable and ignore the unknowable. Look, directing clients to their goals in life, I think what's more important is direct the products or portfolio allocation to the cash flows and the temperament of the investor. If the temperament of the investor cannot even take a 10% downside, I knew of an extremely rich man. He had probably $500 million in bonds. Extremely rich man. And he then started saying, okay, I want to get into equity. And he wanted to put $2 million into equity. And then he suddenly stopped his fund manager. Arey boss, wo mat dalo abhi yaar, wo shayad usme thoda aur downside baki hai. Now, how much is $2 million to his $500 million portfolio? You should know that that guy has zero temperament of equity. And so my sense is that matching your products to the temperament and the cash flow requirements of clients is, again, one of the most important things that I've learned. Look, this is basically product understanding. Now, I will give you an example of what I have learned. I went to the US, and I used to market in the US as well, my products. And by the way, the work ethic of American New Yorkers is amazing. So I hope you can get inspired by that, because I did get inspired by that. My meeting was at 7:30 a.m. That guy came in with my entire presentation. He was an evaluator of my product. He said, I'm having the second coffee with you. I came in at 5:30 in the morning to the office. I had gone through your presentation. I want to know, slide by slide, please tell me how will you do this? How will you do that? What are the risks here? Who's your custodian? How do you take foreign exchange risk? How do you manage your equity process? 1.5 hours of grilling. He understood our product extremely well. And then, he said, I've understood it. I will come back to you. When markets tanked in India, he said, I want to put money into your fund now. So that is how these people think. And I'm sure that inspired me a lot. That kind of work ethic, that kind of understanding of markets inspired me a lot. I hope that's what you can learn from as well. I know that you guys are planning, you have a business. I don't want to advise you on how to plan your own business, but my sense is that it's always good to have an end in mind. What is my revenue that I'm going to have over 5 years? How do I objectively divide that into number of clients and what kind of assets I can move into them? The one thing, again, I've learned in investing or asset management is keep it simple. If you do not understand Bitcoin, don't ask your client to invest in it. You say, boss, मेरे से नहीं होएगा, आपको जैसे करना है, आप कर लीजिए. So always keep it simple, invest in what you understand, and use common sense. It's so typical for people to invest in small caps in financial year 18 after 5 years of great small cap performance. It is so typical to get the largest amount of money in October 21 or thereabouts, when the market has already demonstrated 16 or 18 months of straight returns. It just happens again and again. So I think knowing those trends and knowing those mistakes, I think are always helpful for the long term. Final product is myself. Again, like I said, I think the most important thing is you have to keep yourself knowledgeable. I think the world is changing, and I think you'll be surprised at how fast the next 5 years will go and how different it will be in terms of markets. A favorite movie of mine is Jerry Maguire. It has Tom Cruise in it. He's a salesperson. He's a sports salesperson. And there is a very smart salesperson who keeps coming and giving you advice to sales. And he says, unless you love everybody, you cannot sell to anybody. So you have to be that kind of a person. You have to just love everybody, and you have to love the world that you are in. You have to have that characteristic. I think it summarizes everything that a good salesperson needs to be. So I think that really kind of hits me in the right spot. MFDs of the future, I think this probably is talked about enough, but I think develop deep relationships, develop trust. When it's, the client knows, when you are telling him something, is it your interest or his interest that you're guarding? The client is smart enough to know that. So my sense is develop trust, because the biggest brand, he's not buying a product, he's really buying you. So I think for long-term success, that is extremely important. I'm really thankful for your time. I think it's a phenomenal opportunity. At least I'm excited about being in India. I think there's a great amount of equity assets that are going to be created in the next 5 or 10 years. I wish you a lot of success. Thank you for your time.